Evening friends, today I have a company called Manaksia Steels Limited, which has a price jump after Mr. Damani acquires stake in the company. During yesterday's trading session, the shares of a company engaged in manufacturing of secondary steel products are in focus on the stock exchanges after a prominent investor, Mr. Ashok Kumar Damani, bought stake in the company via a bulk deal on the NSE. With a market cap of 420 crores, the company hit an intraday high of rupees 68.96 on BSE, nearly 1% up from the previous close of 68.25. The stock has delivered positive return over 14% in the last 1 year and has gained about 26% in the last 1 month. Uh, the bulk deal available with the NSE, a prominent investor bought 5.25 lakh equity shares in Manaksia Steels Limited through an open market transaction representing 0.8% stake. The deal was valued at about 3.74 crores, executed at a price of 71.3. Uh, the the Manaksia Steels reported a marginal growth in revenue. One second, yeah. From operations, experiencing a year-on-year increase of nearly 20%, rising from 133.6 crores in Q3 FY24 to 160 crores in Q3 FY25. However, during the same period, the company's net profit declined from 4.8 crores to 2.3 crores, representing a 52% drop. That is a quarter year-on-year. EBITDA for Q3 FY25 decreased by 6.5% to 5.8 crores, down from 6.2 crores the previous year, same quarter previous year, with EBITDA margins also reduced from 4.65 to 3.62 for the same time frame. In key terms, financial metrics currently has a return on equity of 8.62, ROC 10.2. Company's debt to equity ratio stands at 0.44. Is primarily engaged in the manufacturing of value added secondary products like cold rolled sheets, galvanized corrugated sheets, galvanized plain sheets, color coated pre painted sheets, and related products. The manufacturing units of the company are located in Haldia and Bankura, West Bengal. The views and investment tips expressed by the investment experts, broking houses, rating agencies on the internet are of their own and does not have any of my personal input. Investing in equities poses a risk of financial losses. Investors must therefore exercise caution while investing or trading in stocks. Myself, the author of this article, is not liable for any losses caused as a result of the decision based on this article. Please consult an investment advisor before investing. So, we'll take a look at some further information. You can see here the price on the stock market today is at about 73 rupees, which shows an uptrend of 14.5% today, 44% up in the last 5 days, 52% up in the last 1 month, 7.78% in the last 6 months, and overall 26% in the last 1 year, which is a very good sign for the company. Ownership strength is missing the benchmark. Stock is at a premium valuation. Company seems highly inefficient in case of asset management, which is something that the company would need to work upon. The company possesses stable growth history and manageable debt. So price to book value 1.5, market cap 481 crores, cash 23 crores, debt 182 crores, promoter holding 75%, earnings per share last 12 months 1.93 rupees, sales growth minus 1.48, ROE 10.23, then ROC 11.25, profit growth 138.93, then public holding is 24.62%, which means the stock could be highly volatile in terms of volume and price, as there's no investment from foreign investors or direct investors. Uh, MSL is a flagship company of the Manaksia Group, a multi-product, multi-location light engineering company in the field of metal production, metal formation. Products include cold rolled steel sheet and coils, galvanized steel sheets and coils, color coated steel sheet and coils. Company has several profile lines and corrugated machines that can produce profile sheets as trapezoidal, tile roof profile, and sinusoidal profile sheets. Cold roll sheets, hot dip galvanized sheets, pre-painted profile sheets. Company's color coding sheets come under the 5-star super color and produced in the thickness of 0.18 mm to 0.60 mm. Housing, consumer appliances, industrial and warehousing sectors. Export countries: Bhutan, Ethiopia, Cote d'Ivoire, Liberia, Sierra Leone, Gambia, Ghana, Nigeria, Sri Lanka, and the UAE. Company has a subsidiary via Technomet International FZE in UAE and 3 subsidiaries in Nigeria via the Federated Steel Mills Limited, Far East Steel, uh, Far East Steel Industries, and Sumo Agrochem Limited. Company has a manufacturing unit in Haldia, West Bengal. It has a manufacturing capacity of 1.2 lakh metric tons of steel, cold rolling products, 36,000 metric tons per annum galvanizing plant, and 48,000 metric tons per annum cold coating line at Haldia, and about 30,000 metric tons galvanizing plant at Bankura. Stock PE 38, book value 48.4. ROE says slightly corrected version, more up to date return of the last 1 year. ROC 9.58 and ROE 8.44. The previous site was showing FY24 figures probably. The company though is reporting profits, no dividend paid, low return on equity of 8% in the last 3 years. Earnings include another income of 17 crores. Some comparisons in the industry. You can look, the PE varies from 20 to 40, 50 rather, 20 to 50, and the median is 24.7. The median price of the industry is about 160 rupees per share, and the market cap median is about 747 crores. Then the return on capital employed is ranging from a -8% to a high of 28%, and the average median of 76 companies about 14.5. So anything beyond 14, 15 seems to be a decent kind of return in the industry. Then you can see the sales have been erratic, revenue is inconsistent, profit has gone down to minus, and it has covered up in the last quarter, December Q3 FY25. Net profit still is not as expected. Then the year-on-year performance, again, sales have been erratic in the last 3-4 years. Net profit has been fluctuating up and down, which is a cause of concern. Then minus 21% sales growth in the last 1 year, minus 55% profit growth in the last 1 year, 26% stock CAGR upward in the last 1 year, return on equity 8% over the last 5 years, 7% over the last 10 years. Then reserves about 300 crores, borrowings have reduced, which is a good sign in the last 6 months. Overall inventory days have uh, inventory days have increased. Debtor days have also increased. Days payable have improved a bit. Working capital days have increased as well. So overall, The company is not been performing well, and the overall management has been inefficient in the last 2-3 years. So it's a cause of concern as to how the company can bring a turnabout in its operations. Looking at the ratios again, this is something that we've already gone through. Government has a 0.63% stake, which is something that we did not cover in the previous slide. So friends, thank you for watching. Wish you a happy weekend in advance. Please share this video with your friends, family and associates, those who may benefit from this information. Please also share your valuable input and comments on the ways that we can improve this content, and if there's any additional information that I can present along with my video. So thank you so much for watching. We'll connect very soon again with another video.